Hey everyone, welcome back to Corporate Decoder, the place where we dig into company filings to uncover their secrets. And today we've got a real gem, a quarterly report from Consumers Bancorp, Incorporated, a bank holding company that shows us how they're doing financially in late 2025. This report is for the quarter ending the 31st of December 2025, and it gives us a snapshot of their financial health. But remember, this is just a peek, not the whole picture. Let's dive right into the numbers. They reported a net income of $27,55,000 for the 3 months ending the 31st of December 2025. Now that's a solid number, but how does it stack up against last year? Looking at the 3 months ending the 31st of December 2025, their total interest and dividend income was $14,808,000. Compare that to the same period in 2024, which was $13,215,000. That's a jump of almost $1,600,000, or about 12%. This shows the bank is earning more from its loans and investments, which is generally a good sign. And that strong interest income pushed their net interest income to $9,905,000 for the 3 months ending the 31st of December 2025. That is up from $8,319,000 in the prior year period. Think of net interest income as the bank's profit from its core banking business lending money and taking deposits. An increase here is like a business selling more of its main product. Now let's look at the big picture, their total assets. As of the 31st of December 2025, they had $1,212,530,000 in assets. Compare that to the 30th of June 2025, where they had $1,165,008. This means the bank has grown its overall size by about $47,522,000, or roughly 8.2% over just 6 months, which is pretty quick growth for a bank. Where is all that money coming from? Well, primarily deposits. Their total deposits reached $1,089,054,000 by the end of 2025, up from $103,681,800 in June 2025. This increase of over $52 million shows that customers are trusting them with more of their money, a vital sign for any bank. And what are they doing with all that deposit money? They are lending it out. Net loans grew from $804,988,000 to $863,615,000. That is an increase of nearly $59 million, which is a substantial jump, suggesting they are actively growing their loan portfolio. However, banks need to be careful when they lend more money. For the 3 months ending the 31st of December 2025, they recorded a $175,000 provision for credit losses on loans compared to $85,000 in the prior year. This increase is a signal that management is setting aside more money just in case some of those new loans go bad. It's like setting aside a rainy day fund for potential loan defaults. Growing a bank isn't cheap. We can see that in their non-interest expenses. For the 3 months ending the 31st of December 2025, these expenses were $7,918,000, a jump from $6,781,000 in the same period last year. A big reason for this rise is increased salaries and benefits and costs related to new branch locations. Basically, they are spending more to grow their team and expand their physical presence. Even with those higher expenses, net income for the 3 months ended the 31st of December 2025 came in at $27,55,000. That is a nice increase from $22,87,000 in the same period last year. So while they are spending more, they are also bringing in more money. Now let's talk about earnings per S-Hair for the 3 months ended the 31st of December 2025, their basic earnings per S-Hair was $0.87. This is calculated by taking their net income and dividing it by the number of shares outstanding. They had about 3.15 million shares outstanding during this period. Higher earnings per S-Hair can mean a company is becoming more profitable for each share of ownership. When we look at their shareholders' equity, they reported $86,126,000 as of the 31st of December 2025. That is up from $76,271,000 at the 30th of June 2025. This growth is a mix of strong profits and a positive adjustment in their other comprehensive income, which relates to changes in the value of their investment securities. Their investment portfolio has taken a bit of a hit in terms of value. The unrealized loss on their available for sale securities was $22,522,000 at the 31st of December 2025. This sounds bad, but remember, these are unrealized losses, meaning they haven't actually sold those securities. Usually this happens when interest rates go up and the value of existing bonds goes down. Management believes these securities will recover their value. Asset quality is crucial for banks. As of the 31st of December 2025, their non-accrual loans, which are loans where payments are significantly overdue, stood at $895,000. This is slightly down from $930,000 in June 2025. While this is a small percentage of their total loan book, it is something to keep an eye on. In their management discussion, they talk about how they approach and manage their business. They emphasize growing their net interest income by increasing their loan portfolio and managing their interest expenses. They also highlight their efforts to expand their branch network, which helps them attract more customers and deposits. The report also details increases in non-interest expenses, particularly in salaries and benefits and occupancy and equipment. This is directly tied to their growth strategy, including opening new branches and hiring more staff, which is a common move for a growing financial institution. Let's talk about their net interest margin of 3.43% for the 3 months ending the 31st of December 2025. That is a healthy increase from 3.02% a year earlier. This means the bank is making more profit on its interest-earning assets relative to its interest-bearing liabilities, showcasing effective management of its core banking operations. Now, like most companies, they include forward-looking statements. These are essentially their best guess about the future. They mention risks like economic downturns, rising interest rates, and cybersecurity threats. These are standard risks for any bank, but it is good they acknowledge them. Overall, Consumers Bancorp Inc. seems to be on a growth trajectory. They are successfully increasing their assets, deposits, and loans. Their net interest income is up and their net interest margin is healthy. However, they are also increasing their provisions for credit losses and their operating expenses, showing that growth comes with costs and risks. The key for Consumers Bancorp will be to manage this growth effectively. They need to ensure that the increased lending doesn't lead to a significant rise in bad loans and that their expansion efforts continue to pay off. The increase in their securities portfolio loss is a concern, but it seems to be tied to market conditions rather than specific company issues. What do you think about Consumers Bancorp's latest report? Are you impressed with their growth or concerned about the rising expenses and potential credit risks? Let me know your thoughts in the comments below. If you found this analysis helpful, give this video a thumbs up and subscribe for more deep dives into corporate finances. Also, make sure to check out our Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next one.